Hello to everyone, my name is Gregor and welcome to our new video update surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the dollar index, the S&P 500 futures, DAX, Euro, Kiwi and crude oil. Now, US dollar is in a recovery mode and probably it has something to do with US debt ceiling. So obviously speculators think that negotiations will be successful regarding the US debt ceiling, which is somehow needed. Otherwise, this could have a very bad consequences for the financial markets. So the US dollar is currently trading to the downside, but I still think that this could be only a temporary recovery that belongs to a higher degree corrective cycle here that I'm tracking since February, since the beginning of February. Ideally, this is going to be a flat correction ABC pattern, meaning that there can be even whole move up back towards this wave A resistance at 105.80. So that's the key level from where we could see a reversal lower still this year. So in my opinion, I think that the major top here formation has been formed last year for the US dollar and that we will continue to the downside after this corrective pose is finished. Okay, so for now it looks like that in the short term, yes, there is room for some more dollar strength, which certainly can be the case because we have even the S&P 500 falling now and reversing after this first push out of a triangle. So I'm looking here for an updated wave count showing a completed 5-wave impulse up from March levels. So we know that when this impulse is completed, you will usually pay attention to this trend line support, and if it's broken, then we can step into a higher degree correction, meaning that all the way back towards 4060 could be the pullback, or even 4000 level. So we are observing now the corrective stage here for the S&P 500, for the stocks, and as long as the stocks will be trading lower, I think that US dollar could continue even higher and even accelerate, because US dollar was showing evidences of a bottom and recovery even when the S&P 500 was breaking out. So now when we are seeing a reversal, I think the dollar has room for more upside, and especially if this US debt ceiling deal will be successful. If we take a look on German DAX, also we are seeing a major reversal happening. Now firstly, we have here daily count. Notice that we can count 5 waves up back into new all-time highs, but now we are failing here at the upper line, okay, of this parallel trend line. So it's actually an Elliott wave channel where we can see the limited upside at the upper side. Even this fifth wave has to be structured by 5 waves before this whole pattern can come to an end. And if you look closely here, we can certainly count 5 waves up on the 4-hour time frame. In fact, we were looking for limited upside in that range and warned about potential reversal, which is usually the case, especially when the price comes out of this triangle, because triangles will typically occur within the higher degree trend, but will cause the final move that will complete the higher degree impulse. Okay, so there is a triangle that normally causes a lot of confusion, so a lot of traders are on the sideline, and then finally when they are seeing prices breaking higher, that's when they want to jump and ride this bull market. But normally that's the overcrowded move, overcrowded trade, and that's why it simply doesn't work. So the market makes the opposite reaction quite unexpectedly. Now we are seeing this very sharply moving lower, also breaking this wave 4, wave 2 trend line support. So I think that we are in a wave A of the higher degree ABC pullback, meaning more weakness could be seen here on German DAX. And at the same time, as you know, these risk off flows are supportive for the US dollar. If you look at the euro dollar, also here we are seeing a reversal pattern going on. Only temporary, in my opinion, could be dealing with a wave C down of this flat correction. So obviously, sorry. So obviously, similar but opposite direction to US dollar index that we showed earlier. So I think that there can be more short-term weakness. Also, looking at the 4-hour chart here, we can see also very nice ongoing breakdown with this broken trend line here, so which typically will put an extended wave 3 in progress. So wave 3 should be made by 5 subwaves, and if you look closely here, I still think that there can be room for more weakness. So maybe short-term resistance remains here at 108.35 up to 109, I should say. Okay, so this market is bearish as long as we are below 109.50. If this one is broken, then I think more upside will be seen. But based on the things that I see across different markets, I just think that euro weakness will resume. And now let's take a look on Kiwi. Now looking at Kiwi, we are seeing a very nice bearish reversal pattern with very strong bearish move happening right now. Despite the fact that Bank of New Zealand raised the rates, but as you know, speculators are looking or speculating what central banks may do on the upcoming meetings. Well, everyone expects that they will be on pause because, as you know, inflation is coming to the downside, and interestingly, we have seen even some weakness here on New Zealand already last month when they hiked more than expected. And now when there was no surprise, now when we are sooner or later approaching end of the hawkish cycle, I think that this is the reason for a very strong drop here on New Zealand dollar across the board. And looking at this price action, looks like that we are in the middle of this ongoing wave C, which is a motive wave, meaning it should be made by 5 subwaves, and for now we are still in the middle of wave 3. So definitely I'm looking for a push back to these 2023 lows before we may potentially stabilize somewhere around 0.60 level later this year. But before I may look and turn bullish, I want to see the completed 5-wave cycle within this ongoing weakness. So for now, I think that there is a bearish trend that could resume in the next few days and weeks. Now let's take a look also on crude oil. Crude oil is still showing a potential very strong support after reaching this area at $57 to $63 per barrel. I think that here market stabilized for this year around this very big pivot level. So watching for this potential broken trend line that can take prices much higher into this wave B, so minimum 3-wave recovery is what I would be expecting back towards 1900, maybe even 100 level. Looking at the 4-hour chart, I think that potentially we could be bottoming is because of this very strong spike followed by a very sharp immediate bullish reversal, and this reversal in fact can be counted by 5 waves. So you can see here waves 1, 2, 3, 4 and wave 5, and now looks like there was a consolidation, or maybe still consolidation can be in progress if wave 2 will become a little bit more complex. But I think that sooner or later we will see more upside either straight from here. If we can close on a daily basis today above $74.50 or $75 per barrel, then I think this broken trend line will signal that we are already in impulsive fashion in extended wave 3. If this trend line will not hold and we rather see a reversal by the end of the day, especially during the US session, then I think that interesting and important support is still going to be around $70 per barrel down to 69. Okay, so no matter how I look at it, I still think that major bottom has been formed here, at least for the next few weeks, and that we could see a move or continuation higher back towards this area, which is here around 76, 77 is my minimum upside projection, but then obviously much higher if wave 3 will really come into play. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk